Hi. Now, we are going to look at subtopic 3.2, types of source documents. Previously, you've learnt about the accounting cycle. The first stage of the accounting cycle is about analyzing business transactions. In order to identify business events and analyze the transactions, you need to get to know each type of source document and understand its purpose. First, let's look at the term of source document. A source document is a valid written document that provides information about business transaction that took place. A source document serves as basis for recording a transaction. It also serves as evidence when auditors later review a company's financial statements and need to verify that transactions have, in fact, occurred. Next, we're going to talk about each of the source document. What does each of the source document look like? And what is the purpose of using each of them? Invoice. Invoice is issued by the seller to the buyer in the event of a credit transaction. It would normally contain all details of the transaction and payment expectations. For example, transaction date, credit terms, contact names of the two parties and their addresses, a description of products or services purchased, including prices and quantities. If the business retains the original invoice, it indicates that credit purchase has occurred. On the other hand, if the business retains the copy of invoice, it indicates that credit sales has occurred. This is because the original invoice has been handed over to the customer. Delivery note. Delivery note issued by the seller to the buyer. It is delivered together with the goods. It is used a checklist, which enables buyer to check the items received, and it can also serve as proof of delivery, as a copy of the delivery note is returned to the seller. Next, we will look at debit note. Debit note is issued by the seller to the buyer. The purpose is to inform buyer that his account has been debited in the seller's books of accounts. In the order words, the seller is telling his customer that, hey, your debt to me has been increased. How about credit note? Similar to debit note, credit note is also issued by the seller to the buyer. However, its purpose is to inform the buyer that his account has been credited in the seller's books of accounts. It means that the buyer's debt has been reduced. Now, let's look at purchase order. Purchase order is issued by the buyer to the seller. It contains information about the goods to be purchased. It is used to order goods or services officially. Please note that the business should not record any transaction based on purchase order. This is because the purchase of goods or services has not taken place. Receipt. Receipt is issued by the seller when receiving payments from the buyer. It provides evidence that the seller has received payment of goods or services made by buyer. Payment voucher. Payment voucher is an internal document issued by a business to record any kind of payment. The purpose is to ensure payments are duly approved by the correct authorized personnel before payments are disbursed. Cheque stub. Cheque stub is a part of a cheque that is kept by the business for record-keeping purpose. The details on cheque stub include purpose of the payment, to whom the cheque was paid, date that the cheque was paid, amount of payment. Next, let's look at bank slip. Bank slip is a form issued by the bank for customers to fill out in order to perform transaction, such as deposit or withdrawal. And lastly, bank statement. Bank statement issued by the bank to the account holder at the end of the month. It is a summary of financial transactions that occurred during a certain month.